Hello and welcome everyone. I am Anand Gyanbote. I welcome all of you to tradingteacher.in. So today we are going to learn about important candlestick pattern, that episode number 11, piercing pattern. So what are the interpretations of this pattern and how to take a trading decisions on this pattern? We are going to see today or learn today. So generally this pattern happens on in a downtrend when the market was falling, and after market was falling, the market was searching for its bottom, and after searching a bottom in that candle, the market has started to go in a upward direction, and on that day the market closes its position, or its close value should be 50% above than the previous day's candle. After that, the next day can start the stock moving in uptrend upward direction. You can buy on this candle, and you can wait for the next signal to exit. So how we can take a trade on this pattern, we are going to learn in the next few minutes. Okay, we have already started our candlestick series. Those who are viewing this video for the first time, then you can see or you can watch these videos or on Dozy Hammer. Each candlestick pattern is having on one episode, and the current episode was 11 number piercing pattern. So first we need to understand the technical definitions of it. The piercing pattern is made up of two candlesticks. The first black and the second was white. The black means it is a bearish candle, and the second white means this is a bullish candle. And this candle should close above the 50% of the previous day's candle. So that is the important here. And this pattern engulfs the previous day's candle that I have already mentioned in the bullish engulfing. It is very similar to bullish engulfing, but it occurs in a downtrend. Okay, so this one was example I have taken from the Indian markets. So this was the Karnataka Bank piercing line pattern formation here. So how it is formed, that pattern here, just we are going to explain here. The Karnataka Bank was from falling to 180, and the current value was, it touched the low of 150 and 145 I think, and the next day the market opened a gap up here, gap down, sorry, the market was opened a gap down, and it made a low of 142.5, and from that day the market has closed above the 50% of here, or 50% or above the 50%. Then from the next day market can go in a upward direction. Okay, so this is a very simple interpretation of this. If you are in a short, then after seeing this candle you can exit your position, and those who are not in a trade, then they can buy here and waiting for the stock to go up. Okay, so this was another example of Reliance Industries had shown a piercing pattern formation, and from that day the Reliance was falling from around 1090 to it has touched about the low of 990. After that the piercing line and piercing pattern was formed here. Then the Reliance was started to move up again. Okay, so you have to identify this pattern should come into the downtrend, and the candle should close up to 50% or above the 50% is much better than that to finding the correct decisions. Or you can wait for the next candle to come, and this doji candle will clearly show us the trend reversal here. Okay, if you are not known about the doji, then you should watch our doji's episode. I am making the videos in 3 languages, Marathi, Hindi and English. If you like this video, you can share or you can subscribe for the next episodes. In the next we are going to see about the live chart. To go to the live chart, go to www.tradingteacher.in/chart.html, and I have already opened here the chart. So this was our website, www.tradingteacher.in, and by default it opens the chart of ACC. Okay, and we have to find here the pattern of piercing pattern. So you can open the full screen chart here by clicking here. I have already opened the chart here, full screen chart. So this is a chart of ACC 1 day chart. So each candle represents 1 day, and we have to find its bottom Bottom means the down trend should be downtrend, and the piercing pattern. So this pattern was a bullish engulfing. This is not a piercing pattern, and we have to find this pattern. Okay, we got it here. So this was the piercing pattern that I have shown in the slide. I will show it once again. So you can look here. The trend was down, and the making a low. The market should close below the above the 50% of it. So you can find here, look at here, the piercing pattern. So this has not, this was not made here the low of that. So this is not a piercing pattern. We have to search again another piercing pattern. So don't get confused on that. Yes, we got it. So this is the piercing pattern. It formed around on the day 15th of June 2015. The market has closed here around 1373 or 1367, and on the next day the market has opened a gap up, sorry, gap down, and it has opened around 1360. From that day the people started to buy it, and it closed around 1389 or 1386. From that day the market has gone in uptrend or in upward direction. Okay, so when to exit this, and we are going to see the next pattern. So first of all, we have started our candlestick series. First of all, we need to learn all the candlestick pattern and identify this pattern in the live chart. So this much is important. So you need a downtrend, and the piercing pattern was closed here like this. You can compare here like this. Okay, if you like this video, then you should like, comment, share with your friends, those who are making losses in market. And if you have any questions, you can mail us directly from this email, or you can write the comments on this. That video I will explain you very clearly on that. Thank you for watching this video. We are coming with the next episode very soon. Bye bye from tradingteacher.in.